If the UK is supposedly anti-landlord, overtaxed, unaffordable and declining, why do some of the biggest pools of capital on earth keep buying its housing? Because the answer to that contradicts almost everything the headlines say. You will hear the usual complaints. The country is declining, housing is unaffordable, taxes are rising, landlords are leaving, and some of that is true, but then something slightly awkward keeps happening. Global investors keep buying UK property. Pension funds, private equity, international capital, entire apartment buildings now being bought not to sell, but to rent. So either the headlines are missing something or serious capital is. And that raises a much more interesting question than whether the UK market is simply good or bad. What is it about the UK that serious capital keeps seeing, even while the public conversation sounds so negative? Because the answer is not really about housing at all. It's about the system housing sits inside. And to see that clearly, you have to stop thinking like an investor for a moment and start thinking like an engineer. One of the biggest mistakes people make in property is assuming housing markets rise because people feel optimistic. They do not really. Optimism can affect sentiment for a while. It can change volumes, it can change mood, it can change how noisy the market feels. But over time, housing markets are driven by something much simpler than mood, something that compounds quietly in the background while everyone is busy arguing about politics. Scarcity. If supply can expand easily, prices struggle to outrun everything forever. If supply struggles to expand, scarcity builds quietly underneath the surface. And once you look at the UK through that lens, the conversation changes very quickly. Because the UK is not just a country with expensive housing. It's a country with a very specific kind of housing pressure. Start with geography. The UK is a relatively small island economy, yet it supports one of the largest economies in the world. England in particular is densely populated and economic activity is concentrated. London, Manchester, Birmingham, Leeds. When demand is concentrated into a limited number of economic centres, it does not disperse neatly across endless land. It compresses. And this is where the UK starts behaving very differently from somewhere like the United States. In a very large country, when one city becomes too expensive, people can often relocate dramatically into another economic zone. In Britain, that tends to happen less cleanly. People do not really leave the system. They move a bit further out, then commute back in. It sounds like a small behavioural detail. It's not, because demand does not disappear. It stretches, and stretched demand still leans on the same housing system. Now add planning. The UK has one of the most restrictive planning environments in the developed world. Greenbelt constraints, local authority approvals, historic preservation, infrastructure friction. The point is not that every one of those rules is automatically wrong. The point is that together, they slow housing expansion dramatically, even when demand is obvious, even when affordability is already strained. And many of the places people most want to live are historic cities that were never designed to expand. London, York, Oxford, Cambridge, Bath. Conservation pressure, limited redevelopment flexibility, restricted room to grow. So now you have concentrated demand inside a system where supply responds slowly, painfully slowly. And that is where scarcity starts compounding in a more durable way. If that still feels abstract, there is a simpler way to picture it. Manhattan. Why is Manhattan so expensive? Not because New Yorkers are irrational, but because demand keeps growing and the island does not get any bigger. Supply cannot stretch in the same way it can elsewhere, so prices adjust. Now zoom out, because in some ways the UK housing system behaves more like Manhattan than like a typical country. Not literally, structurally. Demand grows, supply is constrained by geography, planning, and infrastructure. And when prices rise, people do not vanish from the system. They move further out, they commute. They compete for nearby alternatives. So pressure keeps building inside the same broad housing ecosystem. In America, pressure can jump states. In Britain, it often just moves 40 minutes further out and stays attached to the same city. And the thing about scarcity-based systems is that scarcity does not disappear quickly. It compounds slowly over years, over decades, which is exactly the sort of thing institutional investors care about. because institutions are not trying to predict next quarter's mood. They are looking for structural conditions that are likely to persist. Then add London. This is where people often oversimplify the UK. London remains one of the most dominant financial centres in the world. That matters because global finance attracts companies, talent, money, and people who need somewhere to live. But the effect does not stop in prime central London. Its gravity spills into commuter belts, surrounding regions, and it reinforces demand across other major cities as well. So demand is not just concentrated, it's reinforced by one of the strongest urban economic engines on earth. There's also a cultural layer worth flagging in Britain. Property is not just shelter, it's also wealth storage, retirement planning, inheritance, intergenerational support. Parents help children onto the ladder, homes get passed down, property sits inside family financial planning in a way that reinforces long-term demand and attachment. So the UK is not unusual because of one single factor. It's unusual because of how many reinforcing forces are operating at once. Other countries share some of these characteristics. Some have old cities, some have deep cultural attachment to land, some have strong economic dynamism, but very few combine all of the following at the same time: a small dense island economy, restrictive planning, historic cities with limited expansion capacity, a global financial capital, a deep cultural attachment to property as wealth storage. That combination is what makes the UK housing system different. Not magical, not flawless, different. And in investing, difference matters because unusual structures tend to produce unusual outcomes. And this is where the story gets interesting, because if scarcity is just a theory, you would expect serious capital to be moving away from UK property, not toward it. The opposite is happening. Pension funds, insurance companies, private equity, these investors are entering the UK housing at scale through build-to-rent, large residential portfolios, and long-duration rental platforms. And institutions do not deploy capital like this because they got excited by a brochure. They buy assets and systems they believe will keep generating durable demand. That does not mean they think every UK property is a good investment. Obviously not. It means they see something attractive in the underlying structure. They are not buying perfection. They are buying persistent scarcity. Now, none of this means UK housing market is flawless. It's clearly not. Affordability is a serious issue. Taxes have increased. Regulation has changed. Many landlords are leaving. Those are real pressures, but the mistake people make is confusing friction with collapse. Often those pressures do not override the deeper structure at all, because structural forces usually matter more over time than headline mood. And those forces have not disappeared, which is exactly why serious capital keeps accumulating UK housing anyway. The UK housing system is not attractive because it's perfect. Investors rarely buy for perfection. They buy structure, and the defining structural characteristic of UK housing is persistent scarcity. So when the next person tells you UK property is finished, ask them the question this video opened with. If the country really is declining, why does the smartest capital keep accumulating its housing? Headlines just don't answer that question. Systems do. Markets are rarely shaped by headlines. They are shaped by systems, and systems tend to persist for a very long time. This is one piece of a much larger pattern. The risk filter and industry decoder map the full structure, how to evaluate property as a system rather than as a collection of individual deals. If you are looking to explore your first property investment or your next property investment, there's a link below if you want some more information to see how all of this fits together.